What's good, everybody? It's Jonah coming back at you on another video. So with this video, I wanted to do the trade recap for today, February 3rd, 2025, right? As you can see, today is that same day, and it's just because my trading session is over and I wanted to do a recap of a trade that just took place. So first and foremost, before starting, we always like to start with the news calendar here on Forex Factory for the week. And you can clearly see we had news at 10 in the morning today, um, and that really didn't affect trading whatsoever. But tomorrow we have Jolt's job opening, so news at 10 o'clock, and then essentially I'll be behind the computer today and tomorrow to see if a setup will present itself tomorrow. And then literally for the rest of the week, since it's NFP week, I literally just walk away from the charts. I don't even open the charts from this week from Wednesday through Friday because I'm not interested in gambling. I'm interested in taking the setups that present themselves. So the interesting part about today is that setups presented themselves in this session for both NAS100 and the S&P. So if you were behind the charts watching price, you could have entered with either pair and walked away with some profit. Um, so jumping right in, we want to first begin with the daily time frame. So if you've been following my channel for like a lot of my earlier videos, essentially the one component that I always disregarded was daily bias because I never understood how to read daily bias. It just never made sense in my mind. Um, because I just felt that all different guys that I found online just was delivering different information. But now I understand it, and now I have a level of clarity with daily bias, and it's insane how much this plays a factor in my trading. This right here, determining daily bias, this is by far the most important component when it comes to trading, because if I can use an an analogy for what daily bias is essentially just imagine yourself being next to a river, and we know rivers can flow upstream or downstream. The same idea with daily bias, either you're going up or down. Obviously, price can consolidate, but generally speaking, price moves up or down. So when you look at your daily time frame and you can determine bias, you're essentially determining the direction of the river, and you want to make sure you are trading in alignment with that river because then that is what's going to maximize your win rate and what's going to maximize your profit because you're riding the wave in whichever direction it's going. So as we look at both pairs are clearly bearish. So some people may be asking, well, how do you know it's like how can you determine it's bearish? Well, if we look at this price leg that went up for NAS 100, we see here from this candle here to this candle here, this was a new week. That's why we can see a massive gap in between these two candles. But this candle that gapped and went straight down, this candle broke this structure point right here, right? As you can clearly see, this was a swing low. Price came down and broke this swing point right here. So then it shifted price from bullish momentum to bearish. And right now, price has been giving us all the signs that it's continuing to be bearish, right? Because this candle here came up and wicked inside this gap in price, and price has continued going lower, right? Price did not go up and break these highs. Same idea here with price for the S&P, right? We focus on attention on the S&P on the cursor. This candle here that went down, it broke this swing point right here, breaking structure to the downside, and then we see a gap that was left, and we see price came in and tapped into the gap, filled the gap, and it's continued to go down, right? Price has not made a new high. So because we are bearish, we are only looking to take sells, and that is the major distinction. If you watch my previous videos from many months ago, years ago, right, on this channel, I was not able to find consistency because I was not aware of daily buys. I didn't understand daily buys. So because of that, I was just trading whatever direction I thought price was going rather than the direction I'm expecting price to go. So now having my daily buys in mind, now I can trade with a much greater level of confidence because I'm expecting price to continue in a certain direction. And if I take a trade in that direction, then I'm trading with overall momentum, right? So Daily bias, you want to stick with your bias unless price gives you a reason to change it, right? So if there's no reason for me to, if price is not giving me any signs of any structure point being broken, bullish or anything, right, then I'm going to maintain my bearish bias and I'm going to keep trading bearishly and keep taking sells until the wheels fall off, right? That is the mentality that you need to have as a trader. So both pairs right here, bearish. So now jumping right in, we'll just use this replay button right here. Sorry, I'll just focus. For some reason, the replay button doesn't do it for like both pairs how it used to. So I'll just focus on the NAS. I'll just start here with the, NAS100. We'll focus on that first. So going into this day, right, there's a few key times to be aware. It's 8:30 because 8:30 is generally when the quote unquote hunt begins. That's when price generally begins to attack liquidity. Then you have your 9:30 open. This is all Eastern time. This is all New York, right? So here we are on New York time. 8:30 is when price generally starts attacking liquidity. 9:30 is the stock market open, right? Because Nas and S&P are both stock pairs. And then today we have 10 o'clock news. So here, beginning at 8:30, there's a few things. Obviously we have the massive gap. So this was the week opening gap. So, to have a gap that big, I understand that price may want to push up and fill into that gap, which is good, right? Because if we're bearish, we want to see price make a bullish rally after 9:30, right? A bullish rally and then break down lower. So I'm expecting price to push up and fill in that gap that we just highlighted from this candle to this candle, right? But now what we want to do is, if we look at our confirmations at the top right, we now want to use a 15-minute time frame to mark liquidity pool. So prior to 8:30, which I'll mark it here for you guys with the vertical line. The vertical line is 8:30. So to the left of 8:30, do we see any swing highs, right? And clear as day we do, which would be this high, which I'll anchor it and I'll just label it buy side liquidity. So we have that here, right? So to the left of 8:30, this is the most recent swing high that was created. Why did we mark the swing high? Because we're bearish on price, so we want price to push up and trigger and take buy side liquidity before breaking down lower and then going after the targets, right? So I'll just provide you guys with a very crude drawing of that explanation, right? So we want to see price do this, or not really. We want to see these liquidity pools and stuff stay intact, right? Because those are the targets that we want to eventually hit if we can take price lower, right? So we want to see price just sort of like hang around. Then after 9:30, we want to see a push up, right? Which is clearing all this buy side liquidity. And then we want to see a break of structure lower, right? To get rid of that structure point there, right? To blast through. And then if price leaves a fair value gap, we want to take the fair value gap and then ride price lower. We'll sell in this area, right? That's where the fair value gap is, and then take price lower to clear out these lows and then do a final target down here. So that is essentially the logic that we are looking to follow. Um, okay. So now we can jump into the 5 minute time frame because we have everything ready, right? Now we want to see what happens, as we approach 9:30, and then we have the 9:30 open. So this candle right here, this is the 9:30 open. So we're on the 5 minute time frame, and the reason why we're on the 5 minute time frame is because we want to see liquidity get grabbed, and then after liquidity gets grabbed, we want to see a bearish candle form, obviously with momentum, because if there's a break of structure going bearishly, right, going down, we want there to be momentum, and then we could drop down to the different time frames to see if we have an entry. So here, this 5 minute candle wick the liquidity. Well, it cleared the liquidity here, which is a good sign. But now we want to see some sort of bearish candle that signifies that price may want to go lower. So this is even better, an extremely aggressive bullish candle, right? That's what we want to see. This rally up, we see this as the fake move. We see this as the move that entices traders to jump into buy positions because they see an aggressive move up, and so in their minds they think, oh, you know, price is bullish, price wants to go higher, but we Because we understand the daily bias and we expect price to go lower, we're not chasing price to go higher. We're expecting it to go lower. So here on the 5 minute time frame, we get this bearish candle. So now we drop into the 4 minute time frame, 3 minute, 2 minute, right? We'll work our way down to see if we ever find an entry, like a break of structure and an entry. So right now we're not really seeing anything, right? So for example, on this 2 minute time frame, the last structure point was this level. So I would want to see price break down this level and leave a gap here, right? But it hasn't done so yet. The 1 minute time frame, the last structure point is right here at this level. I'll just get rid of the text, right? Because we know it's already the buy side liquidity got purged, right? If you guys need a reminder, have it here, right? So we know buy side was taken. So on this 1 minute time frame, the last structure point was at this level. So I would need price to break down this level and leave a gap and trade through. So nothing yet. So now we'll skip to another candle. Boom, we get another aggressive bearish candle. So we'll just drop down to the other time frames to see. So 4 minute time frame, no break of structure because the last structure point is here. 3 minute, same idea here, last structure point right here, no break of structure, but so far we're seeing a gap form, but no break yet. 2 minute, boom, right? So on a 2 minute time frame, we clearly see clear as day, price comes down, blasts through this level, and leaves a gap. So this would fit the confirmation for a trade, right? You can put the short stop, like some people will put a stop loss on top of the candle that formed the fair value gap. That's an option. Me personally, I like putting the stop loss above the high because that's where I feel most comfortable. If price ends up tagging my stop loss, it's probably because I was wrong or price just didn't want to give us the trade this time around. But this already is a legitimate setup right here. So now what we're doing, right, and let me just mark this for you guys here so you can see it clearly, right? This right here was the uh break of structure, and then right, you seeing bearish candle, a bullish candle, but then bearish, 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 and it blast through and left a big gap. So that fit our confirmations. So now we want to look for the targets, right? So for me, if we look at these lows right here, this is almost equal lows, right? These almost look like equal lows because they are very smooth. So I'm seeing that as a target already, right? So right here, about right here. And I like to mark my targets, purple, like different colors. So I know what it is, right? So this is very smooth. So this is an obvious target right here. And then if we go back, on like the 5 minute time frame and look around, we don't really see many other things. Like, of course, we see, you know, pretty small fair value gap here. And then, price pretty much has like the final target over here. So this is pretty much what I'd be looking at right here. I'd take at least probably 50% of the position, anywhere from like 50 to 80%, because these are smooth lows, and there's not really like a massive gap down here that like price can go to and fill, right? This is like a decent sized gap, but then there's not really like too much else. Like, of course, you have like a tiny gap from here to here, but it's not anything else that's crazy. And like this point, like these equal lows down to here is a big distance. So like I would much rather be conservative, taking off at least 50% or maybe even more, because this would still technically be a one-to-one. That's still a decent setup, right? Like it's still a legitimate setup, a one-to-one, especially if you have a high win rate, right? Then that's fine. So this is where I would take at least 50%, if not 80%, and then let the rest ride to the bottom. So here we can look at it on a 2 minute time frame. You ideally want to stay on the highest time frame that you can find an opportunity on. That's usually how it works. And same idea here on the 1 minute time frame, right? It's pretty much the same gap on the 1 minute time frame, right? Because on the 1 minute time frame, this structure point was broken, and then obviously you have the fair value gap left here. So it really doesn't matter which time frame you use. But then for this first target, it's like a one-to-one, And then for the last target down here is ultimately a 1 to almost 3.5 risk to reward. So we'll just we'll just put it all the way down here because this would be like our final target. Um, and then we could just stay on the 2 minute time frame, see if anything happens, right? So then boom, obviously like you guys can see that we got tapped into the fair value gap with this candle right here. And the reason why we're targeting this fair value gap is obviously like we want the fair value gap to be between the displacement low and the displacement high. So this is from the last structure point to the high. We want the fair value gap to form in that space, which clearly it did. And we took it, right? Price tapped into it. So after you get tapped into a trade, you essentially want to go back to the 5 minute time frame. And the reason why you want to go back to the 5 minute time frame is because you essentially want to you want to give your trade room to breathe, right? You don't want to just move your stop loss immediately because then um you could get stopped out prematurely, like at break even before the actual move happens. So you need to give your trade time to breathe. So one rule of thumb I like to use is I like to move my stop loss to break even after a 5 minute swing gets taken. So like essentially uh after the trade gets triggered, um, whatever 5 minute swing gets formed during the move, when price breaks that level, then that's when I'll move my stop loss to break even. So here we also have the setup forming on the 5 minute time frame, right? And for the structure point, this is the last structure point on the 5 minute time frame. You see price clearly broke it and left the fair value gap pretty much where we took the entry. So essentially what I'm expecting is boom, yeah, right there. So that's why we didn't want to move our stop loss to break even because on the 5 minute time frame, the setup, the same model that we used was forming on the 5 minute, and price went up, tapped into it. And you can see as soon as price came and tapped into it, it just wicked off, it rejected, and that's what we like to see. That's what we want to see because we're expecting lower prices. So clear as day, price made a swing low, right? You can see it right here, right? The candles to the left and candles to the right are higher. So this is the swing low that formed after a trade got triggered. So now if price goes under this level, then I will move my stop loss to break even to have it a risk-free trade. And of course, I'll take off some partials. So usually whenever the swing low gets taken, I like to take off like 20% of the trade just to walk away with something, right? Have it still be a winning day. And the goal is obviously to make money in the markets to keep growing your account. So if you take out 20%, that's a nice little partial. Um, and of course, here we have this next target that's really close to like taking partials. So then by this point, I would close out at least 50%. If this is obviously low hanging fruit because these are smooth equal lows. So if you don't want to get greedy, you can close off 50% or maybe even 80%, whatever you guys want. So boom, right there. So literally, as soon as we get tapped in with the 5 minute candle, the next 5 minute candle, price trades under this level. It doesn't need to close as long as it trades under. It trades under. So then at that point, I will move my stop loss to break even, right? This would be a risk-free trade. And then clearly you can see with this candle, it stabs right through these smooth equal lows. So you would essentially have gotten a win here and you would have been in a risk-free position. Now, essentially, long story short, price comes down and taps into that fair value gap as well, which we highlighted, but clearly price eventually comes around, reverses, and takes us out. So, of course, remember this 5 minute low got cleared with this candle, so then you would have been break free and you would have taken at least 50%, maybe even like 60% of the position at the bare minimum. At the absolute bare minimum, you should have at least closed 60% of this position before price and move your stop loss to break even. So you would have at least had a decent winning day and you would have been risk free when price eventually reversed, right? So that's pretty much the trading day, and then literally price just continues going up. So, and it takes us to the present moment now as the candles are forming. So this is what I mean. My previous self, before I factored in daily bias, before I factored in before I made these adjustments to perfect the strategy to what it is now, I used to trade without daily buys. So I was basically blindly taking trades. I wasn't fully aware in tune as far as what price wanted to do or where it wanted to go. And because of that, like I would jump into trades that would lose immediately because I would think there's a setup, but one, there isn't, and two, I'd be trading on the wrong side of the market. So I know some of you probably thinking, oh well, I thought you said price is bearish. Why did price go against you and take you out? Well, that's because remember there was the big gap, the big new week opening gap that I showed you guys on the, you know, this massive gap right here. Remember, this is a absolutely massive imbalance that started the brand new week. So I was expecting price to go into that and tap some of it. It may not fill it entirely, but I was expecting price to eventually move up into there. So this could be what price is doing. Price is probably just making a deeper push into the imbalance before continuing to go down. And as you guys can see, we still was able to hit a target and still make some money. So this was a decent trading day, because from the entry down to these equal lows is about a 1-to-1, which if you close off at least like half of your position, that's still something. Your account is still growing. So this wasn't like a mega trading day, but it was still a day where you had an opportunity to walk away with something, and that's all that matters, right? When it comes to trading, you essentially want to show up behind the computer on the days that like you're based on your strategy and your rules or whatever. You want to be behind the computer screen the days that you should be, right? Whatever you decide on, like the trading days based on the news, right? Your news calendar should dictate when you're behind the charts versus when you're not. And today was a trading day for me, so this was an opportunity for me to be behind the charts, and it led to a winning day. So you have to understand with trading is all about showing up on the days where you're supposed to, and simply just trying to get a piece of the pie. Like that's what you're actively trying to do. You're not showing up to the markets telling yourself that you are going to make money on this day. You don't walk into the market telling yourself you are going to take a trade today. You need to approach trading with an investor mindset and say, you know what? I'll be here, and if an opportunity presents itself, I'll take it. If nothing presents itself, then there's nothing for me to do. I'm just gonna sit on my hands and show up tomorrow. That's how you need to approach it. So in this day, of course, an opportunity presented itself, clear as day. So entry was here, short it, you stop loss to break even under this point right here, and then boom, you take out some smooth equal lows, and it taps into a fair value gap before reversing. So this would have been a win for you if you had taken this trade, and it's the same idea on the S&P. So I'll just quickly do this, guys, for you, because there's so many people that will have sit here and say that the market isn't rigged, that is bulls and bears that run the market. But if the market was a free flowing market, then these setups wouldn't be repeating as often as they do, and these setups wouldn't be delivering on both NAS and the S&P virtually at the same time, right? Like that wouldn't happen if this was a free flowing market. Everything what you guys need to know and understand is everything in this market is 100%, 1000% rigged. Everything is predetermined. There's nothing that ever happens here by accident. And I know that can seem scary for people because it's like, oh, well, the market is rigged, should I be nervous? And at first I was concerned too, but then I realized it's actually relieving, it's relaxing, because then you understand that everything, like the market is essentially a show. It's theatrics, it's just a performance, and it's a lot of times it's the same story playing out over and over and over. So if you can anticipate that, if you can understand that, then you can win in this marketplace. Okay, guys, I am back. Sorry, the dog was barking, so I just wanted to check the door. So, essentially, we'll hit the replay again for the S&P. So I quickly show you guys how this is always happening. How this happened on S&P as well on the same day. So this video will be labeled a NAS video, but you're gonna see how it happens for both pairs, right? So here we're on the 15-minute time frame. Same idea here. 8:30. Where is 8:30? we will mark it right here, vertical line, 830. What is the swing point to the left of 830? Clear as day right here. Right, so this is the buy side liquidity that we're looking at, and I'll mark it blue. And what I've done, I've also marked, of course, like the potential targets. We have the low right here and the final low down here. So same idea, jump into the 5 minute time frame, and then we stock price after 9:30. So this is the 9:30 candle. You see it spiked into buy side liquidity. Perfect. Buy side liquidity is taken. Now we want to see a bearish candle with some momentum, and these highs were also taken as well. So here we have a strong bearish candle. Now we jump into the lower time frame, see we see like any sort of gaps or break of structure. Here on the 4 minute time frame, we see this structure point here got broken, but we would need to see another candle, ideally a bearish candle, and see if a gap gets formed within this low, the displacement low to the displacement high. Here, 3 minute time frame, nothing yet. 2 minute, uh, these might be equal lows, so probably nothing. And then 1 minute, nothing yet. So then we'll just fast forward another candle. Boom, another bearish candle, right? So nothing on the 5 minute yet. 4 minute, we're seeing it, right? A break of structure of this low, and it left a fair value gap right here. So this can be potential trade here, right? Same idea with the NAS, right? You take a big partial at this point, and then final target all the way down here at this purple line for about a 1 to 3. So have that there for you. Now let's check the other time frames as well. So that would be an opportunity. Then on the 3 minute, right, you see price came down, price came up here, and then it blasted right through this low. Marking that for you guys. So you see clear as day. This low, this high, this is the displacement range. And we obviously see a fair value gap was left within this range here. So this would be a legitimate setup right here. 2 minute, I wouldn't take it on the 2 minute. Well, because it was obviously a legitimate setup on the 3 minute, this matches with the 2 minute time frame. But this candle here is a doji, so I couldn't really see if this was a bearish or bullish candle. So on the 2 minute, it wouldn't really be desirable to take. But on the 1 minute, right, same idea here. Price came down up. This was the last structure point. Then what happens? Price kind of went up a little bit with this candle, but then bearishly and aggressively blasted right through this low, and then it left a fair value gap within this range. As we can see here, this fair value gap, it did in fact get tapped right here at this point. See the tap? And so you could have jumped into this position at this point right here at 9:48, and now jumping in. So you guys want to cycle through the time frame from the 5 minute down to the 1 minute. See if you're finding fair value gaps and seeing if these fair value gaps get traded into, which in fact it did right here. So you can jump into a sell position at this point. So then once you're in the trade, right, you want to go back to the 5 minute time frame and then watch price to see if price breaks a larger 5 minute swing low. So here, right, we're in the trade. We're technically in the trade over here. We could have taken a partial here if we wanted to, right? Because this low is obviously super close to this low. So we could take a partial here, but remember, we're not going to move our stop loss until a swing low um, gets traded through. And in this case, the swing low is right here, because you can see, right, you guys can see the cancel left and cancel right are both higher. So that would be the swing low where I'm waiting for to move my stop loss to break even. So at this point, I would definitely close probably like 40-50% because it's already at this level here. So I would close a big chunk, but I would still leave my trade open. And then boom, right? So the next candle, boom, clears this low. Then at this point, you are now in a risk-free trade. You should at least close 50%. Anywhere from 50 to 80% of your position, you could have closed it right there, because I'm not really seeing any legitimate gaps. Like, of course, you have like this gap right here, but this one wasn't. I like gaps that haven't been tapped into, but right, it's still a legitimate gap. But just like what happened with NAS, the price eventually reverses and blasts through, right? But here, right, you can see clear as day, price, the same thing that happened with NAS, guys, the same thing that happened here with the S&P. Price went in and tapped our trade. Now, it didn't do it on the 5-minute time frame, right? It only tapped it on, yeah, so I guess price came and tapped it on the 2-minute, which I wouldn't have taken because of doji, and then the 1-minute. So you would have had to pretty much trade on the 1-minute time frame, taking the entry. But as you can see clear as day, price came down, took the liquidity, and then tapped into the obvious fair value gap that was left open before reversing higher. So that's what I mean. People will say that the market is random, that is controlled by bulls and bears. This is not by accident. This continues to happen all the time, day in and day out, across all the pairs. I'm trading indices, but this happens in Forex. This happens all the time. This model that I'm showing you happens across the board, across all the pairs. Like, I'm just doing these videos to expose you to the truth, to expose you what's actually happening. So if you could train your eye to see this in live time, in real time when it's unfolding, okay, that's my setup, that's my trade, I gotta jump in, and you'll have the confidence because this will make sense in your mind, right? You'll be able to trade this in real time because you've seen this happen so many times. You understand the same story playing out, and this is what makes you a profitable trader when you understand the story behind the charts. I'm not using no indicator. I'm not using, anything fancy. All I'm using, like this colors in the back, that's just a session indicator, just showing me green is London session, brown is the New York London overlap. That's it. I actually don't even need to use this. I can trade with a naked chart too, right? But I just like seeing what happened on the different sessions, and my eyes are already used to just trading on the sessions, like having the color, like having things be color coded. But this is the game, guys. So it's either that you're gonna learn the game because this is how the market moves, this is how the market operates. This is the market, this is the algorithm, this is the machine that moves price and operates. If you want to be great at trading, you need to learn this. You need to understand this machine. You need to understand the story, how it communicates, because price can't talk, right? Price can't tell you what it wants to do. It can just print on the screen. All it does is just print itself on the screen, and you have to understand what's going on so that you can put yourself in the best position possible. Understanding the strategy, it won't give you 100% win rate. There's no such thing as 100% win rate. Every trader takes losses. But this strategy is so powerful. This has such a high win rate because you're trading in alignment with the market. This is the market. Trading in alignment with higher time frame bias, right? Daily bias, and you're trading in alignment with how the market is operating. That the market is actively seeking liquidity to take out traders, is seeking liquidity, both external liquidity, which is in the form of highs, right? And equal highs or equal lows, right? If we go to NAS, remember how NAS had the smooth lows, right? Like these look pretty smooth too, even though this was kind of already cleared. But with NAS, it was pretty much like almost equal lows. Price goes for that. Price goes for imbalances. It's no surprise why price cleared liquidity here and then conveniently went to the fair value gap and tapped it before reversing. That was the same thing that happened on the NAS pair. And these are different aggregates of different stocks. So you're never going to persuade me or have me believe that price moves randomly, because if it did, then this wouldn't be possible to trade this and be consistently profitable with the same model. But this happens over and over and over. So I'm doing these videos to teach you guys so that you can begin learning this for yourself, so you can begin studying, and when the time comes and this and price is delivering live, you can trade it. And this is something that it took me years, guys. It took me years to be able to understand it, for it to make sense in my mind, and for me to be able to piece it together, so that when you have understanding, there's clarity. And when there's clarity, that's when you can actually win in this market, right? And this strategy is going to give you an edge, and that's all you can ask for when it comes to trading. You never find 100% success rate, but if you have an edge in this market, you can win, and you can win big, because then you're putting yourself in the best position possible. And if you're winning most of your trades, then all that's like time and compounding will do the heavy lifting, right? Because percentage based trading, if you keep trading and keep winning and then you're trading in percentages, then compounding is literally gonna do all the heavy lifting for you. So what's most important is for you to learn and understand the strategy and to make sense of this. And this, I know the strategy is like very different logic, very different thinking, and that's the point because this is the thinking is different, way more different than how the majority of traders think, and so that's why this will deliver results that the majority of traders aren't getting. That wraps up today's video. If you enjoyed the video, do leave a like and subscribe, as I'm planning to grow this channel now because I'm back and trading consistently. Prior to this, I did not have consistent results, and I understand why. But now we are in a much better position. We are a much better trader, and now we're gonna take this as far as we can, straight to the moon. So do leave a like and subscribe, and I'll be posting videos of trade setups and everything to keep teaching you guys to keep building this channel up because now I'm here trading and we're gonna win big in this market. So once again, guys, it's Joel, and I'm out. See you guys in the next video.